To keep you updated on the capital and financial markets, here is a recap of what happened.
In the face of intense pressure from authorities to help revive a sickly stock market, Chinese fund management companies are increasingly launching equity funds that are bankrolled mostly by the firm's own money. China's securities regulator has been nudging fund managers to prioritize the launch of equity products as authorities scramble to revive a stock market plumbing 5-year lows. In recent informal guidance, the regulator told some fund managers they needed to launch at least 4 equity funds before they open any new bond fund, in hopes of propping up the stock market in a way that some analysts think is unlikely to succeed. Torn between the regulator's guidance and investors' apathy towards equities in an ailing economy, mutual fund companies are increasingly setting up so-called sponsored funds. Victims who have been duped into buying inappropriate financial products will soon be able to claim more in compensation. The Financial Industry Disputes Resolution Centre has proposed to raise the claim limit by 50%, from 100,000 Singapore dollars now to 150,000 Singapore dollars, if investors suffer losses from misconduct, negligence, or contractual breach by employees of financial institutions. The move is significant because the higher amount will apply to the losses suffered, not the size of the initial investment. Take a bank customer who is misled into buying an unsuitable 1 million Singapore dollars product. He can have his case adjudicated by FIDREC if he suffers losses of up to 150,000 Singapore dollars. A hacker hijacked a U.S. Securities and Exchange Commission staffer's phone number to make a fake social media post earlier this month, according to the regulator. The post prematurely claimed that the SEC had approved a spot Bitcoin exchange-traded fund to trade in the U.S. The SEC said on the 22nd of January that an unidentified person changed the password for the agency's account after gaining control of an agency employee's phone number to make the false post on January 9th. The message, which was later deleted, caused a brief surge in the price of the world's biggest cryptocurrency. The agency ultimately did approve almost a dozen of the products the following day. In its most detailed statement yet on U.S. authorities' ongoing probe into the incident, the SEC said that an employee's phone was targeted in a SIM swap attack through the agency's telecom carrier. That attack enabled the hacker to seize control of the agency's account on X, formerly Twitter. The new and expanded tax regime under the Unity government is expected to eat into the returns of unit trust funds with exposure to bonds and overseas markets, affecting more than 10 million investors. With the implementation of the capital gains tax, unit trust funds that make a profit from the trading of bonds will be taxed at 10%. Also, in line with the introduction of CGT, foreign-sourced income will be extended to include capital gains from overseas investments. This means unit trust funds, including feeder funds, with overseas exposure will be taxed at an income tax rate of 24% on the capital gains repatriated to Malaysia. CEOs of asset management firms were shocked when they found out that CGT applies to bonds as well, not just on listed shares. The Securities and Exchange Board of India has extended the timeline for complying with rumour verification norms to the 1st of June. The earlier deadline was the 1st of February. The extension comes on the back of fresh feedback sought by the market regulator on submissions made by the Industry Standards Forum and other proposals around it.
The latest e-Zine is now available for download at FIMM's official website. Download your copy today to keep up to date with what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.